Hi, everybody. This is David Scarica. Today's gonna be an interesting stock chart of the day. Um, sorry, my dad was just telling me about the weather back home, we're looking at these kind of this rally that's happened in Bitcoin, talk about why it's happened. And I have a unique take on Bitcoin. Now, I'm not one of these guys that's a never coiner. I think you have to stick to your expertise. I'm a value investor. I know a lot about precious metals mining. That's my expertise. Obviously that's cost me money. I wish I would had been more into crypto the last few years, but we have to talk about like why is this happening? And I have a different take on Bitcoin, and I know it's done great. But anyhow, there's this article. I'll post a link to it under this on the website about millennials and Gen Z as they're chasing momentum stocks and they're chasing crypto and these hyper like leveraged or like hyper aggressive assets, right? You know, um, you know, uh, you know, and they're kind of doing like they say here, like Peter Lynch, they're investing, you know what you use, right? So they're investing in Meta because they use Instagram and Facebook. They're investing in Google because they use YouTube, all this kind of thing. And they're not really value investing. They're investing what they use, which can work and definitely makes sense. For example, like I've done that in the past as well. Like one reason I have a small position in a streaming service right now is because I use the streaming service, and I have a good experience with it. So anyhow, like that this kind of thing can happen. And so anyhow, it just talks about how they're like chasing things and et cetera, et cetera. And what they're doing. And of course, young people always tend to be more aggressive. Young people are aggressive in the 20s. They're aggressive. My generation was aggressive in .com in the 90s, et cetera, et cetera. But I just think like they're so aggressive. Like, look, I have a generational gap too. I'm a Gen Xer, just I'm 46 years old. I'm kind of right at the end of Gen X. And I'm a very politically incorrect person. So I'm not one of these that's like, oh, okay, boomer. I don't like I'm my best friend is my father is a boomer. Boomers really actually don't bother me that much. I think, they are responsible for a lot of the problems we're having now. They were the ones who really built this big welfare state, and they've benefited from the housing bubble. But on the other hand, the one thing I cannot stand is political correctness. And the problem I have with those younger generations is all this stuff with like gender stuff and race stuff. It's because these universities have somewhat brainwashed these kids, and they buy all that crap hook, line, and sinker. And I have more problem with that than I have anything that a baby boomer's ever done. So, but you read this article, it's just kind of interesting. They talk about here, like Gen Xers are into some of these, are into some of these trades as well. And, because again, being born when I was born, I remember my grammar school in the early 80s. I went to a school called Greensville School. They actually made a decision to get a computer in the early 80s. I think they even they did some fundraisers and that sort of thing because they the government budget didn't cover it, and it ended up being a great thing. So I was using computers at the age of 5, 6 years old. So we're kind of the first generation that grew up with computers. The Atari came out about the year I was born, and so I had an Atari, Nintendo, and all that stuff. Now it wasn't extreme as it is now with these crazy graphics and technology, but we kind of became versed in it. And then but we're also kind of the last generation to grow up without technology. On the other hand, we didn't have cell phones. Like I didn't have a cell phone until my mid 20s. When we first, our computers were pretty general, so we still spent a lot of time outside playing and doing sports and that sort of thing. So anyhow, it's just kind of interesting. And of course, this is all. I think part of this is a desperation move too, where it's like the cost of living is so high. These Gen Zers, these millennials, they can't afford houses, so it's kind of like I want to invest in something that can go up, 10x in a year, not 10x over 10 years, right? Because I need this money. I need this whatever little amount of money. I have 20 grand to become 200 to afford a down payment in a house. Being from Canada, the average house price in Toronto and Vancouver is like 1.5 million. So you need a couple hundred grand just to buy that, right? Or you're going to be renting the rest of your life. I know even here, like I've discussed it in the past. My house, which I bought for just over 300, is probably worth close to $1 million now. And it'd be very difficult for me to own it now because in the Bahamas you have to put down 30% and interest rates have gone higher. But to get into that and this chasing is the one thing I've never bought about Bitcoin. And again, I'm not bearish on Bitcoin. I have been bullish on Bitcoin for a while. And I knew that the ETFs would probably lead to more buying. And looking at this chart, I think we're probably headed to another, all-time high in Bitcoin that could maybe go to 100,000, a coin. But one thing I wanted to show this is that Bitcoin, to me, is not a currency hedge. It is another risk-on speculative investment tool. And of course, now these ETFs, I'm going to show you something interesting about how I think the ETF could end up blowing up in Bitcoin's face as well. Now these ETFs are going to lead that to even more. So this is, the NASDAQ 100, and you can see the NASDAQ 100 had this big rally. I'm starting this in 2016, 2017, fell in 2018, and then rallied back again, from the lows of late 2018, early 2019 to late 2021, had a bear market in 2022, and has rallied again. Well, let's look at Bitcoin. Bitcoin is the same kind of thing. It had this huge rally here, fell with stocks in 2018, rallied off those lows into 2021, and then fell with stocks with the NASDAQ in 2022, and has rallied with the NASDAQ since. So now there's times when Bitcoin outperforms, like we've seen the last few days. There's times when it underperforms within that whole span. Like Bitcoin took a little while longer to kind of bottom and base and really move in 2019, 2020. But, it still ultimately traded with the NASDAQ. And, it didn't have the same top. The NASDAQ's top in December of 2021 was much higher than its spring ties. Bitcoin's was only a little higher, but its move higher earlier was bigger. But anyhow, we can essentially say it trades with the NASDAQ. And what we can see here, again, this is the NASDAQ. This is Bitcoin. This is Bitcoin divided by the NASDAQ. So what we can see is, again, 2016, 2017, really outperforms. Bitcoin underperforms during the bear market in 2018. Again, 2019 to 2021, Bitcoin really outperforms. The bear market in 2021 to late 2021 to 2022, it underperforms. Outperforms here. And then it's outperformed again since the bottom of stocks in late 2022. And you can see here again, so this is, 1 second. I got to change this one right here, just quickly here. So you can see the QQQ, when these big rallies, this is the percentage gain, is up 340%. Bitcoin is up 14,000%. Now, the reason Bitcoin's up so much is that it wasn't trading up much. I should actually started this stock. You know what? I'm going to change this because 2017 is really when Bitcoin became like people started owning on the public. I think that's a better gauge. So you can see Bitcoin still, it's up 5,000% then, and NASDAQ's up 200%. So, but again, what I want to say, look at the pattern. The pattern is almost exactly the same. So now we're just going to look at these. Look, I just want to show you this so we can see these within the context of these moves, So what we can see here is this is 2017. And in 2017, you can see the NASDAQ went up 20%. Bitcoin went up over 1,000%. Again, this was the year Bitcoin really took hold. And you can see this is the Bitcoin chart here. This is the NASDAQ chart, like almost lock and step with each other. Even this little correction here, Bitcoin flattened out here, et cetera, et cetera. We can really see that here. Bitcoin began the year at like 500. So this was the big Bitcoin breakout year when it kind of came into the mainstream. So now we're going to go to 2018 to 2019, which was Federal Reserve was raising interest rates. We had a bear market in stocks. Bitcoin peaks, boom, goes down nearly 72%. We can see here that year. The NASDAQ ends up the year, or this is going to early 29, ends up the year basically slightly down, but basically has a down year. I think it ended up actually the year up like 1 or 2%. But basically from its top, the NASDAQ, if we look at here, the QQQ, went from 180 at its top to 140, went down 40 points. Do the math, and that's an over 20%. NASDAQ has a bear market in 2018. So does Bitcoin. Bitcoin drops even more. You can see Bitcoin drops 72%. The NASDAQ drops, like I said, about 20%. So this is 20. Now we're going to go 2019 to, we're going to go to the end of the bear market in 2021. I'm just going to do it. I'm doing rough numbers because I don't have to be exact with where this purpose is this. And we can see again, the QQQ goes from 150 in early 2019 to over 380, goes up over 100%, 156%. And Bitcoin goes up over 1,100% in this. This also tells you too, if you really want to be risk on, go into Bitcoin. don't go into NASDAQ. This is why I don't bash Bitcoin. This is why I haven't been bearish on Bitcoin, because I'm like, if we're risk on, yeah, we're going to go into you're going to be into Bitcoin. So and you can see like and again, when the market tanked during that little COVID crash, the NASDAQ fell about 30%. Bitcoin went from just over 10,000, actually fell 60%, again, fell more. So, but again, this big bull market, Bitcoin goes higher, NASDAQ goes higher, right? And then we go into 2022, right? And what we can see here is Bitcoin goes lower again. The NASDAQ goes from, the QQQ goes from 380 to 270. The NASDAQ goes down 30% in 2022, and Bitcoin goes down 61%. And then in the last year, we can see that Bitcoin, let's go to this. Yeah, Bitcoin again is up 267%. The NASDAQ's up 52%. So again, it's basically tracking the NASDAQ with higher leverage to both the upside and the downside. So if I throw in a price of gold here, I just want to show you something kind of interesting. Now, gold did go down in 2022 at times. So this is gold. We're going to do price performance. Sorry. Okay. And you can see gold's actually up 17% since the lows in here. But let's go look at 2022. Gold at one point in 2022, you can see actually 2023. Let's actually end this, even this. You'll see actually in 2022, when there's a bear market, right? Gold goes up 4%. Okay. Gold actually, it did decline. Had this big move up into March, but notice these are all going down. Gold's going higher, then trades lower. And then actually, as Bitcoin continues to trade lower, so does the NASDAQ into early 2023, gold rallies, right? So gold ends up not huge, but ends up 4 or 5% from the late 20. And actually, if we get the actual top of the market, that was more like in December. You'll see it even more so here. Yeah, gold ends up 7% roughly from late 2021 when stocks peaked to early 2023 when they bottomed, right? Whereas Bitcoin's down 50%, the NASDAQ's down 24%. So essentially, you at least got your money back with gold. And we saw in 2001, 2002, and it was happening in 2007, and happened in 2018 as well. Gold moved higher in down markets. Let's look quickly at 2018 just to show you this. Again, you can see gold only finishes down 3%, basically roughly flat from the peak in, this, where Bitcoin's down 69% and the NASDAQ actually was down 2% as well. But at its lows, you can see, it was down 15%. So again, gold roughly holds its value. And that's the difference where I believe between Bitcoin and gold, that gold is a hedge that will roughly hold its value, at least in most of these downturns, unless it's an out and out crash like 2020, 2008, and everyone has to sell everything, right? So everything goes down in those. And you saw this in 2001, 2002. And that's my point. We have never seen Bitcoin in a prolonged bear market. 2018, 2020, 2022 were all short drawdowns that lasted, between 1 and 9 months. So let's see how Bitcoin acts in a prolonged downturn. Now, and if a lot of these Gen Zs and millennials are chasing Bitcoin, like they're chasing NVIDIA or Tesla or whatever, or the Magnificent Seven stocks, well, what does that really tell us what's going to go on? That tells us they'll probably be forced to sell like everything else. Now, I know a lot of the fad recently has been, okay, there's Bitcoin ETFs, right? The Bitcoin Trust, we can see this right here. Actually, that's a Canadian one. Yeah, Athena, this is one of the new ETFs, right? Oh, no, sorry. I wish this tells you how they don't really. I'm just gonna. Yeah, the Bitwise one. Here it is right here. That would just launch. And you can see the inflows into these ETFs, this is BitB, the major one, are driving the moves higher into Bitcoin. Fair enough. But one thing that Bitcoin's always had going for it, and it's kind of like precious metals in a way, is that it's got a hardcore, I don't know if you want to call it a cultish, but a hardcore following, right? And these people hold Bitcoin, hodlers or whatever they want to call themselves. And that has been a strength of the Bitcoin community and why the price, I think, has also gone higher, not just because of money printing, asset bubbles, et cetera, is that you have this community that will just buy the dips, never sell. Well, these ETF investors are going to be different investors. They're going to be investors that have gotten in through the brokerage accounts. They're going to be more Gen X, maybe some boomers, and they're going to be more likely to sell when Bitcoin has one of its big drawdowns. And let me show you an example of why this ETF may not work out. When the GDX and GDXJ were created years ago, I was like, this is going to be great for gold stocks. It gives the people a way of buying the sector, without having to pick individual stocks, and everyone wants to be an individual stock. And it basically then the inflows to the ETFs will buy the stocks, will send them to the moon. And it did work for a few years. You can see the GDX went higher here, right after the gate, went higher into 2008, right? But then we can see it's done nothing ever since. And if we just do a quick ratio of the GDX to the GLD, so gold stock divided by gold, you can see when the GDX came out, the ratio of the GDX to gold stocks as compared to the price of gold was basically the highest it's ever been. Like if I were to get you the HUI, for example, before we go back to the GDX, you'll see that the HUI to gold, if I go back to 1997 when the HUI was launched, 96, 97, oh, that's GLD, sorry. So we'll get it to Star Gold. You can see the HUI to gold hit its all-time high in here 23 to 24, but stayed at these high levels until about 2006. So essentially the all-time high levels of gold stocks compared to gold occurred right when the ETFs came out. And now we're near all-time low levels. And I think the reverse has worked. Now that people own a lot of gold stocks through these ETFs, when they sell, it forces the ETFs to dump everything. So it's made ETFs ultimately, or gold stocks ultimately like lag. So that's what I think could happen with Bitcoin, that once we get a drawdown in the stock market and Bitcoin trades lower at the stock market, which as we can see in Bitcoin short history, it has always traded lower in a bear market, where gold stays maybe relatively flat. Bitcoin is always traded lower, right? And remember, the last two moves down in the market, I'm not talking about the 2020 move, 2018 and 2022 were when interest rates were rising. That was one thing that held gold back. What happens if we get into the 2001, 2002 scenario where the Federal Reserve is cutting rates and stocks go lower? I'm still willing to bet that Bitcoin moves lower with the NASDAQ, with NVIDIA, with Tesla, with whatever is going on in the bear market, where gold actually moves higher in that kind of scenario. So anyhow, I just wanted to show you this. I know this was a longer stock chart of the day today. I'm probably not going to do one on Friday because of this. I think this is enough to digest for people. And I kind of want this up there as my most recent video, maybe over the weekend, because I think this is an excellent video to show you this. So what I'm just trying to show you in this is that Bitcoin is a risk-on asset. It trades with the NASDAQ. I don't think it is a form of a hedge against devaluation. It's because it's the type of investors in it. The type of investors in gold are people like me, more conservative, value investors, baby boomers, Gen Xers with capital. Like we're the people that just kind of want to hedge against volatility, and gold's always been that. We're the type of people in Bitcoin, tech nerds, millennials, Gen Zers. They're also speculating in all these tech stocks. And let's say you get a margin call in your NVIDIA, or you get a margin call in your Tesla or Amazon or whatever. You're going to sell your Bitcoin to meet that margin call. So it just kind of makes sense. And again, as I just stated as well, these ETFs are not necessarily going to be the end all be all, because when the GDX was launched and the GDXJ were launched, it essentially became the top of the gold stock valuation compared to gold. And then essentially a few years later became the ultimate top in the gold stocks. And I believe, look at these huge volumes down here, right? These are all like near the lows down here, So it's kind of like, and look at the volumes here. People were dumping this stuff like crazy. And that then caused, look at the spike lower here. Was it big volumes to the upside in the GDX in 2020? No, it was here at the panic low. So then when they dump the GDX then has to dump, hundreds of millions or billions of dollars worth of gold stocks, right? And I think the big Bitcoin ETF, that could lead to it as well, you know? So like you can even see here, okay, there was a huge day here, but these volumes aren't exactly like blowing people away, here. And I'm willing to bet, again, when you see these drawdowns, the type of people buying the Bitcoin buying Bitcoin through this ETF are a lot different than the hodlers and long-term holders. So I hope you enjoyed the stock chart of the day. I think it was something a little different. And yeah, like I said, we've done 4 this week. I usually like to do 5. I'll probably leave because this is Thursday. I'll probably do one Sunday. I kind of again want this up Thursday, Friday, and Saturday because I want this to get some good views because I think this is a really, really interesting stock chart of the day. And I think I'm looking at Bitcoin as a different way in that I'm not bearish on Bitcoin. I'm not bashing Bitcoin. I think it's a great risk on tool, but I also disagree with the Bitcoin argument that it is a currency hedge. This is a risk on asset. So yeah, when the Nasdaq's going up, we're in bull markets, Federal Reserve is cutting rates, Bitcoin is great. But if you think that Bitcoin in a nasty bear market where the Nasdaq goes down 70% again, and all of these FOMO stocks and Magnificent Seven stocks are crashing, that Bitcoin's going to protect you, I think you have another thing coming myself.